Today, stocks came crashing down, and we see right here the S&P 500, Nasdaq fall below the 50-day moving averages. Now, we come over and look at the Fear and Greed Index. Right now, we are well into extreme fear. We have a reading of 14. Now, is this a buy the dip type of situation, or are stocks about the creators substantially lower? We come over and look at how the indices fared across the board. The Dow was down 557 points. The Nasdaq was down 192 points. S&P 500 down 61 points, with the Russell 2000 being down 4.74. But when we come over and look at advancing issues versus declining, we had 75.9% of issues declining on the day. Then when we come over and look at the sectors across the board, we only had 3 sectors in the green: healthcare, utilities, and communication services. Every other sector was in the red, and it wasn't even like a majority of sectors were just barely in the red. They were in the red by a large margin. We come over and look at the Mag 7 stocks. Nvidia down 1.83%, Apple down 1.82%, Microsoft, Meta, Google, and Tesla, the only 2 Mag 7 stocks actually in the green today. And the reason Google is up, Alphabet gets a Buffett bump. Here's the next big Google catalyst. Now, if we go over here and look real quick, we look at Google as it's bucking the trend out there today. Look, even though Google was rocketing up, making, I believe, new all-time highs, and let's just double check this real quick on the monthly time frame. And yes, indeed, Google did make a new all-time high today, but look at the candle, and more importantly, look at where that candle placement is. It's right at all-time highs, closing near the lower range of the candle, forming a shooting star type of candle, and we have that gap down below us. Now, the MACD indicator on the daily chart is also crossed to the downside. Let's look at Tesla, the other Mag 7 stock that was actually in the green today. Tesla also produced quite the selling tail on top of the candle. Tesla unable to fill the gap from just a few days back. Now, what's even more telling out there today was the fact of the VIX. The volatility index was up 12.97%. Now, the rule behind that is whenever the VIX is up or down more than 10%, we expect an adverse reaction in the market the following next 1 to 2 days. So tomorrow or Wednesday, I would expect the markets to potentially have some type of up day out there. Now, when we come over and look at the Fed watch tool real quick, notice we have 22 more days until the next FOMC meeting, and everybody's been pricing in a rate cut. The Fed's going to be cutting rates. However, what about inflation? Because if we look right here, the probabilities of nothing happening is actually 55.1, and that's also causing a little bit of problems out here in the stock market. We come over and look at the dollar index. Dollar index today having a nice little rip on the way up. Then we come over and look at 10-year yield. 10-year yield did spike up a little bit, close roughly in the middle of the range. And we come over and look at the precious metal gold. Gold out there today did spike a little bit lower, but we did have a little bit of a buying tail on the bottom of this candle. Now with gold, I'm really watching the 4-hour candle. We've already been able to now break below Friday's low, but we were able to get back above it. I still am in the camp where I think gold is going to go lower. But on the 4-hour chart, if you guys are trading gold, pay attention to the MACD indicator. Right now, it's still crossed to the downside, showing no signs of firming up yet, but we are starting to get below the 0 line. So over the next day or two, maybe we'll see gold start to firm up here just a bit. Now, jumping over and taking a look at the SPY real quick, notice the SPY, we're almost all the way back to not last Friday, but the Friday before's low. We didn't quite make it down there, and we talked about this in Sunday's video. The fact that if you look at the MACD indicator 2 Fridays ago, look at where the low in the MACD indicator was. Look at where we came down today, substantially making lower lows. And at this point on the daily chart, the MACD indicator is showing no signs of firming up. Then we come over and we throw on the moving averages real quick, and notice where the 50-period moving averages on the daily chart. You can see we are closing below that area. Now, we do have an ABC pattern down here at about 656.97. Now, on the SPY, when we come over and look at where the gamma exposure is, if you guys remember, it wasn't too long ago where we had a lot more gamma exposure to the upside, and more specifically, right around that 700 strike price. But now look where a majority of this GEX level exposure is at. We have a little bit right around 666, but then right down here at 660. We come back over and look at the SPY chart real quick. Where's that 660 actually come into play? And that'd be right here, kind of in this minus development area. And that would be enough to take out the low from a few Fridays back. So I do not think we are done going down yet. And we have that ABC pattern to the downside. Now, something I do want to caution you guys on, if we really start breaking below that 660, that's when we get that waterfall effect, and we can get some massive moves to the downside out here in the markets. Now, when I come over and look at the futures markets real quick, we start off look at the 4-hour chart. Notice we were able to take out Friday's low, and then we wicked right back up. But something we were talking about today on the live stream was the fact that we had this A to B equals C to D pattern in play from the time that we started turning down early this morning, we started theorizing about this could potentially play out. Now, if we zoom this out, that ABC target would come in at 6578.42. And the fact that we've already been able to break below that swing point there also confirms that pattern. Now, just because a pattern is confirmed does not guarantee it will not get busted. Patterns do get busted all the time, but this right now looks like the destination in which the S&P futures markets are trying to make it down towards. We come over and look at the daily profiles on the 30-minute chart. One of the areas I'd watch for a little bit of a bounce back up would be this minus development, which is just slightly above us. That comes in about 67.05 up here to about 67.14 and a half. Now, when we get up there, it's going to be very critical. Do we simply reject back down from that area, or do we form some type of consolidation? Quite often, the first time we come into a minus development area, the market will do one of those two things. Now, there are times we'll just blast right through it. Also, we are right below value area low, which comes in 66.99 and a quarter. Anything above that, I want to target that minus development area. And once we get above that, we can look to target this high volume node, 67.21, then all the way up here towards the point of control, 67.57 and three quarters, and then value area high at 6,800. But note, if we come back down below value area low after being above it, then I want to turn my attentions back down towards the lows from today, and then all the way back towards the ABC pattern that we already talked about over here. Now, what could be some of the catalysts out here to get the markets rocking and rolling? I want to remind you guys right now, Take Profit Trader is 40% off all their evaluation accounts. Best yet, zero activation fee. Take advantage of this offer. Use the link in the description box down below. Use code epitome at checkout. Now, what could be some of the catalysts out here to get the markets rocking and rolling? And this could either be favorable for the bulls or the bears. When we come over and look at the earnings calendar, we have a lot of earnings coming out. And the one that a lot of people are going to be watching out here this week is going to be NVIDIA Wednesday after the close. Now, it's not just NVIDIA with earnings coming out, but we scroll through the economic calendar, and on Wednesday, we also have the FOMC meeting minutes. On Thursday, we're going to get the non-farm employment numbers. And then on Friday, we get some PMI numbers as well. So we do have some other catalysts that could potentially move these markets. We come over and look at the QQQs real quick on the daily chart. And notice we are closing below the 50-period moving average. MACD indicator on the daily chart still looks extremely bearish, at least at this point in time. Now, today basically was nothing more than an inside day with a spinning top type of candle. We have a wick on the top. We have a wick on the bottom, and if you're really looking to get aggressive on the sell side, I do want to caution you guys, because when we're over into extreme fear, that's when we can see some major bounces in the market. And I do want to draw to your attention, and we come back and we look in time, we can see the Fear and Greed Index back in April had a reading of 3. Now, for me, this is the lowest reading I've ever seen in the Fear and Greed Index. And let me know in the comment section down below, have you ever seen a reading lower than 3 on the Fear and Greed Index? Now, when we're over in extreme fear, that could be where you get some type of bounce, but is it going to be before we complete the ABC pattern down to about a price point of 586.20? Come over, look at the 4-hour chart. You can see one low, two low. More times we keep pushing on a low, the more likely that low is going to give way. And look what we have right down below us. We have the 200-period moving average. MACD indicator still looks bearish on the 4-hour time frame. On the 30-minute chart, MACD indicator is trying to start to flatten out here just a bit, and we can turn our attention towards some of these minus development areas. 604.69. Anything above that, next high volume node, 605.87, then the point of control, and then see, can we undo the highs from today? However, I want to caution you guys, because up in this area, this could be where the market rejects back down and we start taking out the lows, trying to complete the ABC pattern to the downside. Now, we come over, look at the QQQs real quick, and we look at the gamma exposure. We can see right down here, we have a lot of gamma exposure right around that 600 strike price. Well, if we look, where are we trading at now? Right around 604. And look at the low today. We made it right around 600, and then the market bounced. And the reason for that was because of all that gamma exposure. But this is going to be a big clue. If we start breaking below that gamma exposure, you guessed it, they can open up the floodgates. We can see the market quickly go down to 590. Now, if we come over here and we look real quick, put this back on the daily time frame, our ABC pattern completion would be down here about 586. So if you're looking for a little bit of a quicker target before that, if we start flushing below that 600 strike price, 590, and then down here towards that ABC pattern completion. Now, I come over and look at the futures markets real quick. I look at the Nasdaq futures real quick. You can see one low, two low. Today, we did not break the low from last week. We came down into it, and then we formed a little hammer candle. However, is this wick about to get run? In my personal opinion, I think it's going to. If we simply look at this case, we have a high, lower high, lower high, lower high, lower high, and we have been making lower lows. Now to me, this is not definitive enough to say this is going to be a higher low. We haven't got any more of a push up at this point in time. Now we come over and look at the daily profiles on the 30-minute chart. You can see we're coming up right near this minus development area right up in here. And it's also right where a structure breakdown point occurred. So in this area, could we potentially turn right back down? I think we possibly could, but let's first pull our Fibonacci retracement. Swing high right down here to the swing low, and anywhere between the 38 and 50% retracement, anywhere in this area between the 38 and 61.8 fib level would make sense for the market to turn back down, and that could set up another ABC pattern on the way down. However, the ABC pattern that I'm more focused on would be this one right here, and this is taking a more conservative approach. If we measure the A to B leg, the B to C leg for the corrective leg on the Nasdaq, we get a price completion at 24,260. Now, if you're like me and you like to trade micro contracts like I do on the live streams quite often, then you want to see which prop firm is best, make sure to watch this video right here.